Okay, traders, welcome back to episode 28. So, in this episode, I'm just going to cover just your overall psychology behind the numbers and your expectation on trading. So, there's a risk management tool that someone that I'm currently teaching shared with me, which I thought was a very good tool. So, if you look at your risk per trade, so obviously, if you go through things that's in the member zone, you're going to see that I've recommended you take, say, minimum 0.5 to 1% risk per trade. So say we start with 0.5 risk per trade. There's 20 trading days in a month. So say you take a trade a day. So understanding the probability. So to be honest, 100% win rate doesn't exist unless you've only just taken one trade or you've just taken a small handful of trades. When we're talking about a 20 trade period. You're gonna win, say, you'd hope to win at, say, your middle line should be at least, you should be at least looking to make, let's say this is our minimum. We should at least minimum be looking to win at least half our trades. That's our guide point. But looking at our calculation, so win rate, the amount of trades you won, the amount of trades you lost, your risk to reward. So you're trading 0.5, 100% win rate, you would have won obviously 10%, 15, 20, 25, and so forth based off your risk and reward. So let's look at it like this. Between 50, I would say as a trader, you should be looking to get between, for me, 50 to 40% of your trades right. That's for me, you're starting to understand your edge and you're starting to get a bit of confidence in your trading decisions. So what risk and reward would you need for that? So if you're getting around 40 to 50% of your trades right, if you took 20 trades at two, so one at 0.5% risk for a 1% gain, which is a 2 to 1, you'd still make, on hitting half of your trades 50%, you'd still make 5%. 45% of your trades you'd make 4, and if you won 40% of your trades you still make 2%. So I just want that to burrow into your minds. I really want you to internalize that. Taking 20 trades and losing 12 of them and winning 8 of them, you will still make 2%. That's obviously at 0.5, but 0.5 for majority of people, their account size isn't sufficient for that to be something that would entice them. So let's just do it on the standard of 1. On 1%, you can see 50%, you'd be making 10%, 7%, 4%. So understand, top hedge funds in the world average between 20 to 30% a year returns. Well, I'm talking world-class levels is over 50%. The vast majority of the hedge fund or any sort of growing accounts or investments is going to go maximum 25% cap. Risk-free investments, at, for example, like interest rates and savings accounts, as you know, they're typically like 1 to 2% a year. So understand, you have the edge in your favor in the area of the numbers. Even if you do have, I'd go as low as saying you win 30% of your trades. That should be the area that as a trader you should be looking to be in this ratio just to be profitable. So understand, your strike rate means nothing. It's all about your risk and reward. So if you win 30% of your trade, so you're taking a trade every day, and 14 days you lost, 6 days you won. At a 2.5 risk and reward, you still make 1%. At a 3 risk to reward, you make 4%. 3.5 risk to reward, 7%. 4, 10, 4.5, 13, and 5, 16. So you can still make money. So most of the setups that I've showed you over this video series, they're all around 2.5 to 3.5 on your first kind of entry. So 30% of those trades go right, which obviously my strategy is higher than that, and I can tell you the stats on my strategy is going to be between 7 to 1% you can gain a month. Once you have your maximum drawdown, which should be, you should no more lose maximum drawdown before you have to stop trading that account, for me is 25%. Once you lose a quarter of your invested capital, stop trading that. Look at the stats, look at your journal, look at everything you've done, reassess, realign with your trading plan, change it, Just basically have a stop and have a rethink about what's going on, and then go again, because too far and too few, many people lose a few trades and then just change their plan. You need to take at least, I'd say at least 100 trades before you even know if that edge is valid or not. Me personally, I took like 250 trades on mine, and then I had the numbers that the lowest my hit rate was on the strategy that I've showed you guys was around 55%, and the highest I went to was around like 75 to 80%, sometimes 85, but I just averaged it between 55 to 75, because when it was going above 80s was when I was more compounding positions. I'm just talking about one entry, one target, one stop loss. It was ranging between 55 to 75. So for me, this is where you need to understand you want to be ideally winning 40% of your trades. Yeah. The next area you should be looking to move into is what I'd like to call, you've got a higher probability chance of probability. So that would be, you've got a high chance of making consistent money from the market without having too much doubt in your mind. So for me, that would be this 55 to 65%. And almost everyone that I've come across, they've they win trades more than they lose, but it's just when they lose too big. Everyone goes around the same things, everyone has the same problems. So with a 55 to 65% win rate, even on a 1-to-1, taking 20 trades, risking 1%, 20 trades, you're still winning more than you lose. So even if you win 11, lost 9, you can see 2%. But we're not interested in 1 and 1.5s. All we're interested in is 2s. So if you win 55 to 65% of your trade at 2% risk to reward, you can see the gains that you'll have over that month. So we're ideally gonna say we're in this area here. So that's literally, we'll just make that green. That's ideally the risk and reward that we target, mainly 2 to 3.5. If we can get 4s and 5s, then we're extremely lucky. But more often than not, we're aiming for 2s to 3.5s. So you can see we'll be in and around this area once you can get 55 to 65. You can easily be getting 19% returns a month, 19 to 13 on a 2, 26 to 19 on a 2.5, 32 to 24. So you can see the gains are there to be had. For me, I'll say 75 is realistically you're at the top level of trading now. I wouldn't really go higher than that. For me, if you win 75% of your trades, then you're an elite world class level trader, because regardless of what everyone makes it look like, I'll say 1% of traders are winning 75 to 70% of their trades. Even Wall Street bankers say you're a great trader if you're right 50% of the time. It's just not about being right. It's about making more when you lose, when you win than when you lose. That's all trading boils down to. But it's just hard to get over that psychologically, because we're hardwired to want to win more than we lose. But it's not necessary when it comes to trading. And that's something that I stress to all of you watching this episode and these videos. It's not about how many trades you win. It's about when you win, how much do you make, and when you lose, how much do you lose. Then it's a random distribution of the market from there. It's a random distribution of wins and losses. It's just you could just control the payout. That is simply it. So if you get to a 70 to 75%, you're on fire at this time. You can see the gains on a 2%, 25 to 22% returns, 30s, 40s. That's you. If you can have 2 strong months at 3.5 or a 70 to 75 risk to reward, you could be doubling your account within 2 months. These are things that's realistic. But I've given you 3 stages of a trader because I want you to understand. Do you really feel like you're losing 80%, 90% of your trades? You'd say is a loser. So in here, I would say majority of people, that's where you're gonna have to be in the, actually you need to rethink whether or not necessarily trading's for you, but this is where you need to rethink is, I need to rethink my strategy. If you're only, this strategy is no good. If you're only winning 10 to 20% of your trades, either your strategy is no good, or you need to make sure you've got a great risk to reward. For example, it's got to be 5s and higher. It has to be 5s and higher. If it's 4.5 to 5, you can either see on the 20%, or 4.5 trades, you'll still make 2 to 4% a month. But that's where you need to understand, you need to get out of there. 25%, I think most traders I've come across, to be honest, they haven't said that to me, but most traders I feel like from the way they talk about trading are fluctuating between this region here. That's where I would say most traders are fluctuating between uh this region here. You're fluctuating between I'm losing all my trades to sometimes I win some trades, and then sometimes I lose a bit more than I win, and you're just trying to edge over that 50% mark. The way that's going to get you there is the stuff that I've covered in this video series and the stuff that's going to be available to you in the member zone. And the most important thing is going to be your psychology. This is something that one video, even 100 videos is not going to be enough. It's something that you just have to learn by trading. I've been trading for 7 years now, so my psychology is on a good, is very strong. I've had times where I've lost 60 to 70% of the trades I've taken, and I've still made profit because of the risk to reward. I've had months where I've only won one trade and I've lost like nine, but the trade that I won made me like 14%, so I've made money for the month. It's just you have to let go of wanting to be right. I know it sounds hard. It sounds easy to say, but it's very hard to do. You have to let go of wanting to be right. You're merely just going up to something, and like roulette, you're placing the bet and you step away from the table. The outcome is not in your hands. No matter how good the setup looks, no matter how many confluences there is, no matter how confident you feel in the trade, it's a random distribution of wins and losses. There is no, every trade is that is the only trade. Every trade is independent of itself. Even when you're on a run of 10 winning trades, 20 winning trades, every single trade is independent of the trade before and after. It's just always one roll of the dice, one roll of the dice. So you need to understand, you have to be consistent in your approach and in your risk management. That is it. All you need to worry about is how much you lose and how well you apply your edge. The winning and how long you win and everything to do with the good side of trading is not in your control. So you need to just understand, get your edge, which is the edge I provided for you guys, that will make you win more than 50% of your trades. You will win between, I'll say upwards from 40 to 75%. This depends on how you implement the edge. But if you have the right risk to reward, like I've outlined, majority of our setups would be say 2 to 3, some edging 4s, and on lucky days we may get 5s and higher. But this 2 to 3, you need to look at the numbers and see where you need to come. You need even 45% of your trades. You want to be around that 45, 40%, just to feel like what it's like to have a winning month. You've made 7%, you've made 10%, 4%. These are great returns, and this is only two risk to reward at a 50 to 40% hit rate. That's where you need to be aiming to just build that confidence, build the trust in the strategy. And once that happens, even if you start increasing your risks, for me, the maximum someone should step up to is 3%. So if you go to 3% risk, you can see how obscene the numbers can get. But the reason why I don't go to 3% and why I mainly stick to 1% is because you have to be able to stay in the game long term. You don't know. If we're saying to ourselves, we're going to average win 65 to 55% of our trades, understand that number of trades now, if we put this to 100 trades, like I said, you need to take 100 trades over and over and over and over, and that is the risk to reward, 100 trades. Yeah, so let's go back to what we were saying around 40s to 50s. So taking 100 trades, so you're winning 50, losing 50, you can't have a 1 to risk reward. You break even, as you can see. What's it going up in? It goes up in 1.5. So 1.5, you see you would make 25%, 2, 2.5, 3, 3.5, 4. So we're looking at this bit here. 1.5, so 1, 1.5, 2, 2.5 to 3. So 2.5 to 3 regions here. So this is where you're looking to be within this area here. And that's over 100 trades, as you can see. You lost 60, you won 40. Even if it's 30 trades, you lose 70 trades and you won 30. You just need to have let's have a look at this hour. So the hours you need to be in is 30%. So we're going to 30%. So 5, 20, 35. So you need to be in here 2.5 to 3.5. That should be your aim for yourself. 2.5 to 3.5 risk and reward. If it's not 2 to 3.5 risk and reward, I'm not taking the trade, because I understand that I haven't got the best hit rate. I need to be around, I'm winning around 30 to 40% of my trades. So I need to always have a 2.5 minimum risk to reward. And then after that, it's merely a thing of letting your trade play out, letting your stop loss play out, letting your take profit play out. Because if you keep changing things, your edge is continuously changing. That's what people need to understand. The more you alter your setup, the more you tweak your setup. You should only be tweaking your setup if, like you say, you've got the figures to back it up that you're only winning 20% of your trades. When you're losing trades, what's happening in common when you lose trades? That's what you should be thinking. So every time I lose a trade, what was a constant? What was something that continuously happens when I lose? When I win, what was something that continuously happens? And then you're trying to build a plan around what happens the most frequent. Then your plan needs to be structured by that. Then it comes down to discipline. You don't need confidence. You don't need any of those emotions. Any emotion when it comes to trading is not good. The only emotion is good is greed. I would say greed and fear are the two main driving emotions in trading. You need to be fearful when you're on the wrong side of the market, and you need to be greedy when you're on the right side of the market. That is all you need to do. When your trade's going wrong, don't add positions. Just let the trade play out. Let the trade play. When your trade's going right and there's predefined times in the market where you can enter, where you feel you can make some more profit, then enter. But never enter more than your first position. So there's ways to do this. So if you're going to enter 1% at your initial position, it goes into profit, like the ways I've showed you to compound trades. Your next entries above that should be 0.5, 0.25, 0.1. It should get smaller. So even if you do 0.75, that's your next entry. 0.5 is your next entry. 0.25 is your next entry. And then that's it. So you can enter 3-4 times after you've entered your 1%, but only add risk once you take risk away. And if you are going to add risk while there's still risk on the table, make it less risk, because the higher price goes, the more it can turn around. And I know a lot of traders who say enter a trade at £1 £1 a pip, and then the trade goes their way and then they enter £10. Then as soon as the trade starts to turn against them, it eats away all your profit and it ends up putting you in a loss, when in terms of pips, you made more pips than you lost. So you need to understand, you have to control fear and greed and know when they can help you and when they can't help you. It's all about learning, but the only way to do this is through chart time and through hours and through you sticking it out. That's the only thing that's going to come around. If you be disciplined every day, every trade, the market will reward you over the long term. You just have to pick your trades carefully, quality before quantity. A lot of people I know, oh, how many trade setups do you take? How many trades do you take a day? Now you need to understand, if there were high probability setups, I'm not talking about, oh, I just see one confluence and I'm going to take the trade. If there was, say, I've got 10 confluences and I see all 10, how likely is that to happen every single day? I'd be a multi-billionaire if my perfect 10 out of 10 trade happened every day. No one's trade 10 out of 10 happens every day. You're off. That's why you need to understand the degree of your trade. You need to be able to almost, how can I call it, rate your trade on a level of 1 to 10. So 10 being the best, you've got every confluence you could ask for, and 1 being you basically just gambling. And then you'll find a constance in how high would you rate the trades that you take. You'll find a lot of you are taking 3 out of 4, 3 to 4 trades. You hardly see 5 and 6s. And when you do see the 5s and 6s or the 7s, you've taken a lot of losses from the 1s and 2s. So now you don't take that trade. So it's about consistently quality over quantity. Find the right trade, trade without fear. Most of the money I've made from trading has been from waiting and pre-planning a trade. It's not been from just looking for trades when I wake up in the morning, open my chart and try and find trades. You have to wait for your trade, plan your trade, strategic planning and discipline. Then implement it without hesitation. That's what's going to make you a profitable trader over the long run. And knowing your numbers and redefining your edge. Everything I'm teaching you in these episodes is for you to take away and almost make it your own. You don't have to follow everything word for word the way that I do it. Just take it as a core structure and build on it, and you're going to become the trader you're meant to be. It's just a blueprint for the right way to trade, and you're going to do it the way that's unique to you. The way you see the markets is unique. Everyone sees the markets differently, but there's a right way to see it and a wrong way. And once you're on that side, you can now build that way, the way that you're meant to do it. So I hope you enjoyed this episode, and look, stay tuned for the next one.